What we're talking about today principally is we're talking about characteristics. Okay, in essence, all I want to share with you today is characteristics of breakout trading. Okay, so I'm just going to write there, this is breakout trading. Okay, so what we are in essence trying to do is we're trying to observe what are the characteristics or the variables that alert us or make us aware that a specific market has broken out or it's breaking out in the process of breaking out. Okay. Now, one of the things, how this question came up this week is I had one of the members ask me, when do I think oil is going to turn? Okay, he said to me, on his indicators, the oil is overbought, and he's looking to sell. Okay, and what I said to him is, don't get me wrong, I'm aware of the overbought conditions. I'm aware of, where price is and what we've done relative to where we started, sort of the beginning of the year. However, right now, in terms of the price action, okay, in terms of the price action, nothing signals yet that a short is a viable, strategy. And that's ultimately what we're going to look at today. We're going to look at objective information. We're going to look how we as traders can remain objective so that we're aware of the potential for a short. Okay, don't get me wrong. There's definitely going to be a time in which we want to be short, the oil. However, until the price action signals that to us, we don't want to just sell the market blindly. Okay, so we're looking at the objective facts. We're looking at the information objectively and then determining our strategy. So number one, we have a hypothesis, which is there's overbought and oversold conditions. But number two is ultimately the timing. In other words, when do we execute that trade? When has the price action told us with objective information that the market has now turned? Okay, so you hear a lot of people throwing this word around, price action, as though it's something you just see on a screen. It isn't. Okay, price action is objective information that the market tells you objectively something has now occurred. And I'm going to show you what that looks like so you can be aware of it and hopefully capture some opportunity in the oil market going forward. Okay, so what we're looking at, we're going to start off with the market profiles, and I'm going to show you what these characteristics look like on a chart in a minute so you can be aware of them. Now, what's leading this breakout in the oil, what's keeping us with the trend for now, okay, are these characteristics. One is the low volume areas, two is the single prints, three are the constant buying tails, which happen to be coming at 2 p.m. daily for the last 6 sessions. Okay, and then the last one is obviously the initiative buying. In other words, buyers are stepping in to take initiative and lift the market up. Now, I'm going to show you what these look like on a profile so you can see each characteristic one by one. Okay, now, one of the things, and it's important you understand where I'm coming from, the reason why, or how I've come about understanding these characteristics is I used to be, when I started my career in 2011, I used to be a trader that would consistently end up fading, the German Bund trend days. These Bunds would hardly ever move, and then, it was roughly speaking 7% of the time we would have a trend day, and on those trend days, I'd get absolutely destroyed. I'd get to the end of the day, I'd be like, oh, it was so obvious that it was a trend day, but the problem was, until such a point that I defined very specific characteristics that led it to be a trend day, I kept fading them. Okay. The moment I define characteristics, i.e., if this occurs and that occurs and this occurs, it's potentially high probability for a trend. The moment I defined those characteristics, again, I never, ever, ever in my life ended up fading a trend day again. Never once. Okay. I might never have captured opportunity on trend days, but I never ended up fading them. Right? And that's sometimes the key to trading. A lot of traders think, trading is about learning how to make money. It isn't. Okay. In all honesty, trading is all about learning how to sort of minimize the number of errors you make, minimize the number of losses you take. Okay. If you can do that, very often what happens is, you find a couple of gold nuggets and you minimize the losses and you end up coming out on top and making money. Okay. So think about that for a second because it's quite powerful. All right. So we're going to go back to the start of last week, Monday. Now, I'm going to start off and show you the key characteristics one by one so you understand what they look like. First things first, these are single prints. Okay, effectively the market trades a very minimal amount of time over those prices, so it almost skips away from those prices. So from 61.20 on Monday the 1st of April, no April's Fool's joke, all the way up to 61.40, we've got a low volume area here. Okay, low volume area, in other words, not much volume was transacted, not much trade. There was not much two-way trade there. Okay, equally, the market couldn't navigate and fill in those prices on a 30-minute time frame. Okay, if you're new to profiles, each letter effectively is a 30-minute candle. It's 30 minutes of time frame. In other words, over the next candle or the next 30 minutes, we were unable to trade within that price area called 61.20 to 61.60. Okay, so we've got a low volume area, we've got a set of single prints, and we've then got initiative. Now, this is what I'm talking about. Okay, initiative is simply where the market begins the process, or the initiation begins at a certain price point, and we continue to trend from that point. Okay, so what I mean is if I open this up, okay, and we look at this B print specifically, we can see from the time frame that this B comes in, from this price point 60.52, okay, the market began the process of not just one time framing, but also failed to take out any one of the previous lows of the 30-minute candles. Okay, in other words, we had initiative in price towards the upside. So from 60.40 all the way up to 61.70, 130 ticks before the market then began the process of two-way trade. Okay, and that's key because that initiative tells us buyers stepped in down here and they initiated buys all the way up until price point 61.60. Okay, so we have single prints, we have a low volume area, we have initiative, and we then have one more. Let's have a look quickly. The last one is our buying tails. Okay, so a buying tail is just simply very similar to a set of single prints, except it's where a market, it's almost at an extreme set of price points. Okay, so for example, we can see the oil in the Y print started to sell off, the A print sold off, the B print sold off. Okay, but the B print not only sold off from 60.76 all the way down to 60.44, but then got bought back up and closed at 60.64. In other words, there was almost like a V-shaped type reversal, and it leaves a relatively large tail. Okay, so tail is just simply the level of rejection. On a pin bar or on a candlestick, it would just be a relatively large tail relative to the body. Okay, but the important thing is not necessarily just looking at candlesticks with tails, it's looking at the actual price response. In other words, there's a very aggressive rejection off of that price point. Okay, so we've got a big B tail in the market. So we got our wide buying tails. Okay, they can also be selling tails. We've got our single prints, our low volume area, and then our initiative taken a B print. Okay, so this is Monday. Now we can see that very, very obvious characteristics for trend move in the oil. Now, once a trend is initiated, okay, you do not start, it's a bit like what we spoke about last week, where if there's gap characteristics, don't simply just begin the process of fading because there's gap characteristics. Okay, fade once those gap characteristics have been taken out, and it's the same for a trend. Don't go against the trend until such a point that that trend is taken out of the market. Okay, so we come to the next day. We can see we take out the previous day's high. And again, if I open up via the B print, because that's the open of the pit session, notice what we see again. Okay, if I split this up, notice how again the market pings off the 61.60. Again, what do we see? A nice buying tail. And again, we see the process of initiation. Okay, this time, let's compare the initiation. So the first day, we had one time framing. In other words, we couldn't take out a previous low. The next day, we still have initiation, but the initiation is not as strong. Why? Because we did have a straight line bid. The market then sort of settled. It took out the previous low, couldn't take out the B print low, but still continued higher. Okay, so still initiation, but not as strong as the previous day. And that's telling us a lot about the price action. It's telling us that the buying's not as, it's still aggressive, but it's not as aggressive. So again, the trend is very firmly intact. Nothing in this price action tells us that the trend is done. Okay, we then continue on Wednesday. Okay. Market continues higher. What do we see? Market exhibiting two-way trade. So no initiative taken from either side, not from the sell side, not from the buy side. A lot of two-way trade. Okay. We see the same thing on Thursday. Market tries to go lower, gets bought back up very aggressively. Tries to go higher, gets sold very aggressively. Okay. So again, two-way trade. So we've got this trend intact. Buyers very aggressive. Buyers showing initiative. Buyers still buying off of the lows. Okay, we then come in on Friday, right, and we split it up. Now notice, morning period, we continue what we've done the two prior days, consolidating. Suddenly, what happens? The market opens up around that B print, and what do we see? Okay, again, another one of those very aggressive initiative moves. Okay, so that's the crux, guys. It's not that I was long this trend. Okay, make no mistake, I haven't been long oil. Okay, I'm very aware of where oil is. I'm very aware of the price action that oil is exhibiting. I'm not long oil. I'm not sitting here making money being long oil. But what I am aware is I'm aware that I'm not going to be short oil, not until these characteristics being exhibited stop showing the kind of things they're showing. Okay? It's at that point that the objective facts show me something different. That's the point when I start to look for shorts. Okay, so it's not, trading is sometimes, some people, I've never understood it. People really look at trading as though it's difficult. It isn't. You just got to learn to be observant. Look at the facts. Look what the market's telling you. Have your ideas. Want to be short, want to be long because of whatever reasons, but let the market tell you objectively when that point comes, when that timing comes. Okay. Now, let's fast forward on to Monday, because there's something very interesting occurring in this oil now, which is at the moment the pit session opens, i.e. 2 o'clock in the afternoon, British summertime. Okay, the moment that occurs, we're getting the bid up, and we saw it again yesterday being Monday. Right, there's the apron, 2 p.m. yesterday. Suddenly we got that initiative again. Note the initiative, A's, no overlap, no overlap. We took out the D's but couldn't get back below those C's or those B's and just continued to grind higher. Again, we've opened up Tuesday morning, high end. Markets still cannot facilitate trade in that lower bound. Okay, this market is not a sell, not yet. Not until those characteristics start changing. Okay, what do we see from yesterday, Monday the 8th? Lots of B prints, single prints. Okay, so low volume area, single prints, buying tail around the A. So potentially, if we take out this A print, if we get below the 63.12s, that could start to signal that the trend is now starting to weaken and we're starting to see sellers become more aggressive. Until then, don't be a seller and keep buying it. Okay, now I'm going to bring the footprint in. So I'm going to show you the exact same thing, and I'm going to show you what the characteristics look like on the footprint. Okay, so we do the same thing. What are the objective facts, the objective information we can look for on the footprint?